Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Hey y'all, it is Good Friday. The stock market is closed. I did not do my dollar cost averaging because I was too occupied by Elon Musk. And I was tweeting and I was talking, and then I looked up and was like, oh, wait a minute. The market is closed today. So I'm a little upset about it. Y'all know how consistent I like to be, but there'll be Friday next week. So we'll just get back on the train on that day. But in either case, today I need to get up on my grading. So I have several people that wanted to submit their portfolios. I apologize that I've been a little late, but I want to go ahead and start with one today, give my instant thoughts and reactions about what some of you may be investing in. And again, remember, as always, this is for educational purposes. This is just my take, my look into what the portfolio is and what I would do if I was in the situation. It's always important to discuss that everybody has their own goals, and when doing these, I'm taking into account really that I don't know what their goals are. Their goals can be different than mine. I am taking into account, or not taking into account rather, what other things they may be investing in, right? So if what I see here is only 2% of your portfolio, you got another 98 somewhere else, right? Like if you were a client of mine and you were my actual, client where I'm helping you to invest actively instead of just educating in this case, then my answers would be completely different. So just want to throw that out there. Be nice, be kind, and let's sit back and learn a few things. All right, so this one is at Shay Animate on public. Feel free to follow if you choose. And let's just take a quick look at what is here, and then I'll start to kind of break down some of the things I'm looking at. All right, so as I'm looking here, we got some ETFs. We have Verizon, Johnson & Johnson, some more ETFs, American Express, another ETF here, Microsoft, Amazon, and Google. All right, so first, I like this. I like that we've got a good mix of ETFs. We have a decent mix of companies here, and it doesn't feel unwieldy, like not you got 50 different stocks and 27 ETFs or anything like that, because that makes it real difficult to figure out like what your goal is and if there are any conflicts here. So that's good. Also, if you look in the right hand corner, looking to learn who, what, when to invest, okay? But also looking at who pays dividends. I think that's really important, and so I can help to use them to add more of what I invest in later. Every little bit helps. So the way I interpret that is, I want stuff that pays dividends and I can reinvest those dividends. And the reason why I think that's important to call out and to reading is fundamental, is because instantly, if you're investing in Verizon or like an AT&T, they pay great dividends. They've been doing it for quite a while. I would not invest in those though. That's just me. But if your goal is to have good solid dividends and reinvest those dividends, then that's probably an okay. All right. So that was one of my first things was like, I don't know about Verizon, but my goal is dividends. Okay. All right, fine. That's you can have that, okay? But that was the first thing that stood out to me. Now, the other thing that stood out to me, I think Johnson & Johnson for dividend purposes is fine. It's been around for forever. A lot of these dividend aristocrats, dividend kings or queens, if you will, a lot of them that have been paying for forever don't really grow as much. It's not necessarily a bad thing, especially in today's environment in 2022. You might want something that's paying dividends because the market has been a little, right? It's not all that great. All right. Now the next thing I noticed here is this one, Virtus Private Credit Strategy ETF. That's one I haven't heard of. That was like, okay, well, let's look into this. So I'll talk about that in a second. We have a dividend yield ETF. So obviously this is a dividend portfolio. That one stood out a little bit because again, not familiar with that one, and I don't memorize every ETF out there, but that's like, hey, I don't see that one as often. And then this Alarian MLP ETF, and that was really interesting. Another one I hadn't necessarily heard of, but MLPs they stand for Master Limited Partnerships. It's a business structure like an LLC or something like that, but it's a special entity, and I've never seen, at least in my recollection, an ETF that was easily tradable and accessible. So that was another interesting thing. So those are some things that stood out. I was like, this is interesting. We've got three, what I would, or at least two specialized ETFs that are a little high in complexity in terms of like what they actually do. In fact, and I'll show you here, I went to this one and I'm like, this didn't even really tell me all that much, right? AMLP tracks a market cap weighted index of publicly traded energy infrastructure MLPs in the US. And I'm like, what? So then I had to go to this website and figure out what it is. So to quickly explain this on super high level, right? If you want to go deeper into it, you're going to have to find yourself an MLP expert, because again, MLPs are really niche. Essentially, when you produce oil, you need certain infrastructure to do that. So maybe it's pipes, maybe it's the actual well, all that kind of stuff. So there is an index out there that tracks the companies that create the stuff to produce oil and produce energy. So, my mind, maybe I'm not investing in like an Exxon Mobil, but Exxon needs the trucks, they need the pipelines, and all the stuff to produce that. I'm investing in the companies that do that. And for whatever reason, not whatever reason, for the reason why they're master limited partnerships is because they have special tax, let me not say loopholes, but special tax treatment when you create a company and form it as an MLP. Now, that's the best explanation I can give you. I tried, okay? But essentially, this invests in the companies that help the Exxons, the Chevrons, and whomever, and produce oil. So this ETF tracks that. Apparently, there's an index out there, but this ETF tracks that particular index for these very, very niche companies. It's done pretty good, and there are a few reasons for that. Energy as a whole, as well as ExxonMobil and others, have done well, and I would say they started doing well in the fall of 2021. I don't know how long she's had this one, but past 6 months, 14%. Over the past year, 37%. I really can't argue that. Right? It's pretty good. Now the next one that we'll go back to, if it lets me go back, is this one. Now private credit is a little bit different. Was a way different than an MLP, but this one was a little more complex. Basically, private credit is, if I needed credit, if I am a business and I need money, I can just go to a bank, or I can kind of find my way into the private credit market. And that's, again, this one was a lot more complex. There's a private credit expert out there. Not in my best wheelhouse. But the issue here, if I remember correctly, that 1%, it's better than the stock market. The stock market's been down last 6 months, if I'm not mistaken. Over the past year, it's like 11%. That's okay. That's okay. I actually don't have that much beef here. You can see the description here. Tracks another index, which is not as popular, of closed-end funds focused on the private credit market, including business development companies. This index is weighted by dividend yield. So they're looking at, we've talked about dividend yield before, what is the dividend divided by the stock price? That is the percentage of dividend yield, and it's trying to find, I guess, companies with the best dividend yield. And that's how it's done. It's okay, right? I think it's pretty solid compared to where the overall market is. As a whole, if I'm looking at all of these, I got to give this a solid B. The only thing that concerns me here is that it might be a little more. One other thing before it's still a solid B, but I did want to show you this. So personally, Verizon, I might get rid of, but again, if you're focused on dividends, you might want to keep it. That's up to you. And I'll just show you here. The last 6 months, 6%. That's actually not bad. Over the last year, it's down 2.2. So it is improving more recently than it has over the past year. So again, you can hold it if you want to, just not. I feel like I can find better. But right here, I think this is the one that didn't do as well. This is another high dividend yield financial ETF. So if I'm looking, this one is looking for financial companies that have obviously high dividends and a high dividend yield. I don't think we've already had at least 2 dividend ETFs. I don't think I need another one that's only in financials. This one isn't doing as well. I feel like we can take this money and increase it in other places. So this one's the one I was really talking about. This one is down almost 7% in the last 6 months, and then it is only up 1%. I think you could do a whole lot better Hell, Verizon. Verizon could have got you a whole lot better, right? So I would probably switch that one out and either just reallocate, take that money out and split it between the rest of these, or take it and put it literally not anywhere else, but anywhere else in this portfolio based on what we know right now. That's really the one sore spot in the entire portfolio. You don't have to make any changes, honestly. But if I were to make one, it's that one because I already have right here. This is SDY. This has the dividend stocks of the S&P 1500. So it's not just concentrated in 500, it's in 1500, and they're finding what they think are the best dividend stocks there. So I think it really covers pretty much everything. So I don't need to have, I've got all, S&P 1500, all dividend focused. And then let me find the financials within that are also dividend focused. Because that one, the dividend, the KBWD isn't doing well, and just get rid of it for me and reallocate the money anywhere else. Now down here we got S&P 500. We talked about that one before. Solid. That no beef to be had. And then you've got some staples: Amazon, Google, Microsoft. Now you could argue again that yes, the S&P 500 is going to have a good chunk of those three companies in it. That is a fair critique. But, I mean, they've done well with the exception of Amazon. That it's not enough for me to panic at this point, or even be that big of a concern. So, again, a very solid B here. I'll give you a B+. This is a B+, because there's really only one that's not doing all that well. But I don't see any structural errors. The other concern, or at least thing that I would at least be cautious about or be aware of, is with the private credit strategy and with the MLP, because these are more advanced topics for most new investors. Like, I've been doing this for 12 years, and you saw me struggling to figure out like exactly what it is and what it does. Now they've both done well, so that's fine. But you may want to have some specialized knowledge in it. You may want to read a whole lot more into it so that you really understand the investments that you have. The reason why I want to bring that up and at least want to like highlight and circle it is because, like, we know, like, when rates go up, this happens with bank stocks and insurance stocks. Like, we know that, or I know that because we read it and we deal with it a lot more often. Like, I know why Costco is up, Dollar General, Dollar Tree. That's all within my wheelhouse, right? I understand it. I talk about it. I read about it. These just are two areas I have not. Now, if you are investing in it, you want to be way more comfortable with understanding those markets, because if something changes, let's say the Fed raises interest rates again, or they cut interest rates, how does that impact the private credit market? I don't know. I don't invest in it, so it really doesn't matter to me, right? But if you're holding it, you should probably know the answer to that question. What if, which we hope does happen at some point, what if the Russia and Ukraine conflict ends? How does that impact MLPs? I don't know. I also know that the president, I think, released extra oil reserves. How does that affect MLPs? I don't know. Those are two areas that I'm just not an expert in. That my clients didn't deal with it. I don't deal with it. I haven't invested in it. That doesn't make it bad. It just means that you really want to understand what you're investing in. It's just a little more complex. But again, not a bad thing. There are people who do complex stuff all the time. I stick to what I know. Okay, so for those two specifically, I just want to make sure that anybody investing in those things, that they know, not you have to be the expert, but you need to know how these investments have done over time, what type of factors impact this, how do those two, private credit and the MLP, how do they react with inflation? I have no idea. How do they impact with supply chain? Do they even matter for those? Again, I don't know. I know for other industries, I just don't know for those two. So I just want to make sure that anybody watching, as well as the portfolio holder here, that you do know. And you can learn real quick by just doing this. So y'all can see the screen. You can go to it, scroll down, and read a bunch of articles about it and see what it is that you might want to know. I like to read a bunch of different opinions. You can obviously go to the company's website itself to learn more about it too. So high dividend, cool. Advisor's guide to buybacks in this particular structure. again, that's new to me, right? New to me. But if I were investing in it or at least looking into it, these are all the things I would read plus more. So feel free to look more into that if this is something that you're interested in. But that's it. Again, I give it a B plus. Didn't have really many mistakes or red flags here. Yeah, I'd probably get rid of the financial dividend ETF, but that's really it. That's really it. So great job. I would. This is pretty good. So that's it for me. I got more grading to do, so hopefully we can get those out. Depending on what Elon and whoever else does anything crazy over the next week, I try to stick on the schedule. But I got to cover the breaking news. That's why y'all here. But anyway, thank you for coming out. Make sure you hit the like and subscribe buttons. If you have any other questions, thoughts, comments, or concerns, feel free to let me know in the comments below. All right, that's it for me. I'll talk to y'all later. Bye.